Well, it was a tough day for the market, but a horrific day for technology as investors were greeted this morning with news that Google/Alphabet has been assessed with a $2.7 billion fine by the antitrust European Union regulators. Now, the street knew a fine was coming, but conventional wisdom held that it would be around $1 billion. Now, keep in mind, for decades, the EU has been tough on American technology companies, but this fine is seen as egregious and really a seriously unfair blow that goes way beyond unfair business practices. But when it's all said and done, Google will probably pay the fine. They haven't even talked about it. They discuss perhaps appealing it, but have not made it official. The news, of course, made Google the biggest loser among those big, important tech names, but none of these guys escaped the session unscathed. Google was down almost 3%. Apple down 1%, Amazon almost 2%, and Facebook down also almost 2% for the session. So after reversing yesterday, opening higher and then closing lower, the S&P technology sector, which is the XLK, again has closed back-to-back sessions at the low. That's an ominous sign, and yet all of this happening with just really news and scuttlebutt. Really keep in mind, guys, and I really want you to understand that so far nothing with respect to those underlying fundamentals. Nevertheless, there is an issue because tech has enjoyed an almost unstoppable ride for a very long time. Think about this. Year to date, up 14%. Over the past 52 weeks, up 33%. And over the last 3 years, up 41%. So obviously, there's some cracks in the armor of tech. So for tomorrow, that same index, I want you to look at key support of 54. Also watch for volume. Higher volume, signs of panic. If that happens, maybe we start to really break down. On the upside, a close above 56.50 is a buy signal. You want to buy these on dips? That's when you do it. Another issue with the session was rotation out of tech into other sectors. That faded midday. You know, it was happening initially, but then money started to seek the comfort of sidelines. Only banks, in fact, writing comments from the ECB and Janet Yellen were higher. Europe's economy is coming on strong, and Yellen, well, she says there will never be another financial crisis in the lifetime of anyone watching this show. Yes, she said that. I don't believe it either. After the bell, we got earnings from KB Homes. They beat the street on revenues and earnings. Operating income up 91%. Earnings per share at more than 100%. Initial reaction for the stock was higher. We also got the API inventory on petroleum inventories, and all key segments saw a build. So tomorrow's government data has to show a drawdown if this crude rally over the last couple of days is to continue.